Thursday, August 21st, let's level up. Have Jerome Powell doing his Jackson Hole speech tomorrow at 10 a.m. That could be market moving. We'll have to see what he has to say first. I think the market's feeling is he's going to be very intransigent and maybe even political and probably try to dig in his heels to stick to higher rates. I'll be listening very closely to see what he has to say with regard to which side of the dual mandate that they're paying most attention to, whether they're still inflation hawks or if they're mention concerns about the employment situation. My guess is they're still going to be erring on the side of inflation caution, but I think they're going to say they're data dependent and that if things cool down or stay the same, there's to be likely a cut in September. I don't think he's going to actually say anything is live in September as far as cuts go. The probability, we'll talk about in a second, has been jumping around quite a bit. But my thinking here is that Powell is going to try to play his cards close to the vest, stick to the existing script, which has been hawkish up until when they switch at the next meeting. I think that the September meeting is still very possible. Maybe they won't cut in September. If that doesn't happen, I think the market's going to start getting a little bit nervous because it seems like we've been getting tapped along. All year we've been saying, oh, the rate cut's going to be coming, and then it never seems to come. We saw a big drop today in the Fed probability as far as the likelihood of a rate cut. Remember, a week ago it was 92.1% that they were cutting at this meeting. Today it's only 75.3%. Yesterday it was 82.4%. Yeah, that's still very likely, obviously 75%, but it is less than it had been. And I had said at the time we were painting ourselves into a corner where the only way that that percentage could go is to be down. I still think that the September cut is obviously more likely than not based on the Fed futures probabilities, but I wouldn't be surprised to see us have a little bit of a scare going into that. As far as the VIX goes, bulls are very simple here. They need to get volatility back below 1570 to 1565. If they can do that, I'm convinced that the market will level off and probably see some type of a rebound. If we get over the two-day high, and that would be over 1724, I think we could see 1916 and 2085 very quickly. That's the 200 MA and 100 MA respectively. And we have seen the 22s to 22.5 be significant resistance. We are currently above the descending wedge high, so that is something to note. I think the two-day range in VIX is going to be very key. As far as the ES and the NQ go, I think the highs of days from the prior spikes, meaning yesterday and the day before, at 64.12 quarter and 64.30.75 need to clear on the upside. They could be upside resistance, but if those clear, I think the bear case is pretty much done, and we could rally back up to 64.45 quarter and repair the under-quarter close from 4 sessions ago. Maybe get a run at the 64.53 quarter to 64.68 half. Those are all very, very key levels. I would have sell orders at them if you're long, and or mark them on your charts for potential resistance points. As far as the Qs go, they need to get over 23,348 quarter and then 23,432. After that, the repair is 23,587 half. Next resistance is 23,671 and then 23,795 quarter. If we do take a move to the downside, the next potential support would be that 23,045 half, 22,934.75, and maybe a little bit of an overshoot deeper into the 23,000s. We could even get down to the 22,767, but I don't know that that's going to be right away, but that could happen quicker than people realize. ES on the downside, anything below 63.72 half, 63.6345, 63.46 quarter. Then we're looking at 63.2575 to 63.13 quarter. So mark those levels off as potential supports if we come down to them. Generally though, I think we can take this two-day range, be long above it, short below it, neutral inside of it. As far as SPY goes, obviously similar setup. We had the dubstep play today. We're kind of between some key levels here. I think anything that loses 632.74, which is the 50% fib, comes down to the 629.57, which is the 61.8 of the range. On a low, it's somewhere, depending on when it happens. If it were to happen tomorrow, it'd be 628.46. Maybe an overshoot down to 50 MA at 624.23. My guess is that would be a right or right out by the dip spot. On the upside, bulls need to get over 639.85, which was the 731 high. If they do that, they arrest the decline. If they can get over the 10 MA at 640.58, which by the way would be a trim point, I think the pullback is over and we're likely back to the upside. As far as the Qs go, it's very simple. The 50 MA and the channel low line up perfectly at 556.66. That is the must-hold support on any downdraft. If that fails, we'll see 551.68 and maybe even a run back to 540.81. On the upside, the bulls need to get over and stay over not only the 2-day high here at 568.45, but the 20 MA at 569.51, which may actually be some resistance. If that does clear, though, I think that we have a clean shot at the 10 MA at 574.06. That 574.06 to 574.63 is the likely resistance. If that does clear, though, the pullback is over, but I will assume it is resistance until it shows that it's not. Keep an eye on Bitcoin here. This is some key support here at 112,345. If that is lost, we could see 110,150 to 108,960. That area is a absolute must hold. After that, the next level is 105,329. On the upside, we broke down from 117,610, so that is obviously a check back to the neckline, and I do see some potential resistance at 115,000 to 115,635. Bitcoin has been a leader on both rallies and declines. We saw a little bit of a pullback here before the market declined. It's usually somewhere between days or weeks ahead. In this instance, it was a couple of days ahead. Seasonally, this period of time tends to be a little bit weaker for equities, so it's not surprising for me to see a little bit of lag here in the dog days of summer, August into September, sometimes even in October. The big news today was Walmart pulling back. Obviously not good. They were saying they're starting to see inflation from the tariffs hit. Also not what the street wants to hear. 50 MA kind of held it today by the close. I think that there's more interesting support on this closer to the 200 MA at 94.34, and then down in the 92s, actually, I would be looking to buy the dip. We've also seen this trade when it trades either below the 100 MA and back above it or below the 200 MA and back above it as a trigger for a long. So I'm actually going to keep an eye out for that. I think that the 99s to 100 area could be some resistance now. We're back below it. Anything that stays below there remains sideways to lower in my estimation here. NVDA is actually going to report next week, so that's going to be super critical. A pretty big move down the prior session, but closed kind of all right. Today, a bit of a dubstep, but we are stalling a channel high. I think the bulls here need to get over at least the 20 MA at 178.75 and the 10 MA at 180. On the downside, we have some support between the 50 MA at 166.29 and the reference low from 722 at 164.58. After that, it's 153.13. I've told you before, if you want to do some type of a put spread or put ratio targeting the 143 to 133 area, which was the congestion after the last earnings, I like that as a trade and or a hedge. Palantir, I talked about an interesting trade setup here. By the way, bulls here need to hold the 50 MA, currently 156.18. On the upside, 160.55 and probably 166.17. Those are 38.2 and 50% fib retracements are likely resistance. I think you could even have a right or right out short at the 20 MA at 169.15. If there is a move still lower, I had said I like doing the 145, 135, 125, one by one by one. 125 was the key breakout there, so makes some sense to do. If you do it in September, it's a small net debit. If you do it in October, it's a small net credit. Keep an eye on TLT post Powell tomorrow. I feel that the bulls need to get over the 100 MA, 87.04. Anything below that to me has liquidation break potentials, and we could see 84.89, which would line up with the channel low. That was also the 114 reference low, and actually could still be a higher low, but I think that area could be an opportunity for a BTD if we do get a quick spike down there, for at least for a bounce. Meta pulling back here. We've seen moves below the 50 MA and back up above as longs. 628.41, that is the must hold. If we start losing there, we could see 708.87 and maybe even a run down to the 662.67, which would also line up with the key 100 MA area. Generally speaking, markets are still up pretty well for the summer. It doesn't surprise me to see a little bit of pullbacks. Pullbacks are to be expected and even expectable. I think that it's happening right around when it should be happening. No surprise here. I think the market now is mostly through all of the big earnings. Of course, NVDA is coming next week, and that's going to be a key setup. I think if we're up too much into that, that could either be a blow off or just a drop. If we're down enough into that, though, that could set up for a bit of a relief rally. I always like to see those shake and bake type setups. I think the market is expecting bad Powell, so I don't know how much worse he can actually be at this point. If there's any glimmer of hope there, we could get a relief rally into the Friday close. Remember, in bull markets, we usually see Fridays weak, and in bear markets, we usually see Friday rallies as traders cover shorts. Like and follow for more.